Hi everyone, welcome to Drawing Up. This is Sanjana, and in this video we'll be discussing about national income concept. So what is national income? That is the income that a nation gets in a year through the goods and services produced in a year. That is national income. So now there are different concepts that comes under national income, like the gross domestic product, the GDP, the GNP, then the net national product, net domestic product. There are so many things like this. So now first one is gross national product. Gross national product is in 1 year. Okay, so here the time limit is set to 1 year. So in 1 year, what is the total market value, the total market value that we get in 1 year, total market value of all the final goods. So here what we have to check is it should be final goods of all the final goods and services. What is the total market value? That is the GNP. So it doesn't matter if it is produced in some other country, it does not have any territory. The profit should be for our nation. That is gross national product. Now if we are taking the formula for GNP, I can write GNP as C for consumption. Okay, this is equal to consumption. Okay, consumption plus it is a sum of consumption. Okay, consumption, then government spending. Okay, government, I'm writing government, consumption, government spending. Government spending, how much the government is spending, that plus the domestic investment and foreign investment. Okay, so GNP is consumption plus government spending plus domestic investment plus foreign investment. So this is the formula for GNP. Okay, for GNP. Now this GNP, one more thing that you have to notice, GNP only includes the final goods. That is, they will not take into consideration of those intermediate goods that are used to produce the final good. Because if they include them again and again, duplication will occur. Okay, so that is gross national product, GNP. So what will be GDP? GDP is also same except for about the territory. Okay, so in GDP also it is about the time limit is just setting it to 1 year. So the total market, okay, here also the total market value, we are taking the total market value of all the final goods, again final goods and services, but here we are taking one thing as domestic. So it should be in that particular domestic territory. So that is the domestic territory. It should be in that particular domestic territory. That is the only condition it has to be, and all the other things are similar to the gross national product. Okay. So here what will be the formula? So GDP will be, here we are not taking GNP. GNP is the it will include the all foreign things and all other things will be included in GNP. So in GDP what will be? So it is GNP, basically it is GNP, but we don't want the foreign investments inside it. So net factor, this is net factor income from abroad. So the foreign investments included is removed in GDP. So GDP is equal to, it is GNP, but you have to remove the net factor income from abroad. That is GDP. Okay, that is GDP. GNP and GDP is clear. Next, we have net national product. So what is net national product? Again, the formula goes like this. That is NNP. Net national product, I can write it as NNP. So NNP is, it is related to GNP. So GNP minus depreciation. So we don't take into consideration the losses and all in NNP. So NNP is GNP minus depreciation. Okay, so it is the market value of all final goods and services after allowing for depreciation. So what is depreciation? Depreciation or devaluation, it is a fall in value of capital goods like machinery as a result of wear and tear. So it is an annual allowance for wear and tear for a capital good. It is a cost of good divided by number of system it is useful life. That is, if you are taking devaluation or depreciation, that is a total cost. If the pen costs, okay, say the pen costs 20 rupees, okay, 20 rupees, and its life is for 1 month. So how can we write 30 days? So that divided by the life. Okay, so 20 by 30 like this. That is the how much time it is useful. That is the depreciation. So NNP is also referred as national income as market prices, and NNP is always better than GNP because it makes allowance for the depreciation of machinery, equipment, buildings, and all those things. So national net national product or NNP is actually GNP only, but from there we are reducing the depreciation. We don't want the depreciation in the net national product. So if that is the case, what will be net domestic product? That is NDP. What will be NDP? NDP will be about the domestic, about GDP. It is actually the GDP, but we don't want the depreciation. So GDP minus depreciation. GDP minus depreciation is net domestic product, NDP. Same as that of NNP, but only thing is it is about GDP. Then comes what is national income. National income, it is the entire, sorry, okay, the entire NNP does not reach the people. So all the NNP does not require that people, it is reachable to the people. So the manufacturers will have to pay indirect taxes to the government. Manufacturers will have to pay indirect taxes to the government. So here the total income will not be, see, the total income, it's not necessary that all the people should be all the people should get total income. It is not necessary like that. So the government will have to give subsidies on the production of certain goods like kerosene, ration rice. You've heard about it, right? So for that the government will have to give subsidies. So these goods will be sold at a lower price because government bears a part of the price in the form of a subsidy for this product. That is, the payment is also done. Some amount of the payment is done by the government, so it will help the consumers buy it, especially for those below the BPL, the below poverty line and all. So therefore, to arrive at the correct estimate of national, it is necessary to subtract indirect taxes and add subsidies to NNP. So this is the actual national income of a country. National income at factor cost and at market price we have. So NNP, I'm sorry, national income. NI, this one, the first one is about factor cost. Okay, so in this case, we will write national income is NNP, that is net national product. We don't want the indirect tax. So I will reduce the indirect tax. Indirect tax is reduced here, and instead of that, I will have to add the subsidies. Subsidies is being added. Subsidies, okay, that is government is providing subsidies, that is at factor cost. Now if we are taking into consideration about the market price, that is national income, national income at market price, if we are taking market price, then what, again this is NNP, but the indirect tax have to be added. Indirect tax have to be added, and subsidy have to be reduced, and subsidy have to be reduced. Okay, so this is net national income. Okay, net national income, if it is based on the factor cost, then NNP national income, right? So net national product minus indirect tax plus subsidies, and if it is at market price, then net national product NNP plus indirect tax have to be added and subsidy have to be reduced. That is national income. Now what is personal income? personal income is the sum total of income actually received by all individuals in a country during a given year. So this is also taken as in 1 year, how much money, how much income individually the people in a country are getting. In 1 year, how much income individually, in individual level, how much people is getting. Okay, in individual level, how much income people are getting, that is personal income. So I can write personal income pi. Okay, I can write like that. So personal income pi is national income. See here, national income minus, we are reducing so many things like social security contributions are being removed, social security contributions, then corporate income tax, corporate income tax is removed, then undistributed corporate profits. Okay, undistributed corporate profits are removed and transfer payments are added. What is this transfer payments? You must have heard about the unemployment allowances or old age pensions and all. So these are called the transfer payments. So the personal income means the national income is in, it is national income and transfer payments if it is there for a person. So personal income is national income, and from that you have to reduce certain things like social security contributions, corporate income taxes have to be removed, and undistributed corporate profits. All these things have to be removed, but transfer payments have to be added. So next come what is disposable personal income. So again, this is about personal income, disposable personal income. Okay, DPI. Disposable, I'm sorry, disposable personal income means it have to be personal income. Okay, it is personal income, but from the personal income, I have to reduce direct tax. Direct tax will not be included in disposable personal income. So disposable personal income is personal income minus direct tax. Then comes what is per capita income. Per capita income is the average income. Average income per head in the country. Average income per head in the country. So it is a rough indicator of the standard of living of the people in a country. So it is average income per head. So how will we calculate it? So per capita income PCI. So it is also national income and it is per head. So we need to divide it by the population, the total population. So per capita income is the national income divided by population. So these are the basic concepts of national income. Later with these we have to do the problems also.